Hey everyone, and welcome to the second season of the Vagabond VC podcast. Last season I was traveling around Latin America and learning about their startup ecosystems. This season I'll be focusing on Africa and traveling through the continent over the next 6 months. Currently I'm in South Africa, and I'm thrilled to kick off the Africa series with today's guest, Clive Butkow of Kalon Venture Partners. To me, Clive is the face of South Africa venture capital, so I'm thrilled to have had the opportunity to interview him. We met in Johannesburg at a restaurant called Tasha's, so there is some background noise because we conducted the interview in a public setting, but overall you can hear Clive pretty well. Clive has a super interesting background and really understands South Africa's startup ecosystem, so I hope you get as much out of this episode as I did. So let's jump in. I bring you Clive Butkow.
I know you do this a lot, and I actually watched a recent video of you explaining your path from sales all the way to venture capital. So I don't want you to have to repeat too much that you usually talk about, but just to get a quick introduction from you, who are you and how did you get into the venture capital world?
Yeah, I think it's an interesting world. I mean, and I think I'm going to you've probably heard this before, but I came from a very, very humble family. My family didn't have money. Probably very good for me, but my mates had money, so I was surrounded by money except I had nothing. So I was very prudent, started working at 7 and at a clothes shop when I was 7, literally selling men's clothes. My brother was in that business and he got me the job and I worked there and knew nothing about selling. And then I started kite business and this business, a number of little businesses. When I was about 10, 11, I was already like one of the top salesmen in this place and I just knew how to sell. And it was about listening to the client, understanding what the client really needs, and when they want to buy one thing, you sell them 10. So that's where I built my sales career, and I built it by learning, by doing. And I learned how to sell, and I learned how to just how to be empathetic, and learned about empathy, and learned about it's always about the client and the things that you need to know in sales when you're older. I learned at a very, very young age. And then I went and paid for myself through university, did a Bachelor of Science in Computer Science and Mathematics, and I was going to start my own business. I'd raised capital, and then this company, Arthur Anderson Consulting, which eventually became Accenture, basically seduced me and said, I'd never been on a plane before. I was 21, I'd graduated with this degree, and never been on an aeroplane before, just couldn't afford it. So they said to me, you'll be on an aeroplane, you'll go to Chicago, you'll be in a limousine, and blah, 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 and I'll tell you, I just couldn't resist it. So I just sort of put a pin in my dreams of building my own company. And I said, let me go there for 5 years, learn as much as I can about marketing and sales and product development and engineering and everything. And 5 years turned into 28. So I just was learning and growing and developing and being promoted so quickly there that I was the youngest partner in the company. In 1997 I made it. And we were a very entrepreneurial organization. This was before we listed. And we could make, there was 10 partners in South Africa. I was the youngest partner by quite a way. And then we corporatized in 2001. We listed on the New York Stock Exchange. And we became a very different business. It was more corporate than an entrepreneurial business. So I headed up sales. I then headed up our resources business. I headed up our technology business. We had 1,000 people. And eventually became the CEO of the company and helped grow the company to a 4.5 billion rand company, which is a big company, about 2,500 people. And I must say, I got to the age in my life, I'd actually also worked in Silicon Valley quite a lot. I worked in Israel. I'd worked in the big entrepreneurial ecosystems around the world, building tech businesses. So I just knew how to build tech businesses. And I'll tell you, my passion was taking little things and making them big. I just love doing it and making heroes out of entrepreneurs. So I worked with entrepreneurs. I always had a co-founder. I never built something without them, because being in Accenture, I went in to help these companies, became the co-founder, got the equity, and then exited these businesses. And then about 10 years ago, I just woke up one day, I'll be honest with you, and I just said, that's it. I want to build a venture capital company. Tech was really starting to take off here. VC was very immature, not much money around, but I thought with my background, my skills, my experience, I could raise a fund. And left Accenture. To their dismay, they wanted me to go work in Europe and run a bit of the business, and I said, no, I'm out of here, I want to go. And I was young and, fortunately, I made my financial means. And I started a venture capital business, raised a $250 million, we're just raising another 100 now. So I'm the CEO, only GP, the founder. we've built got 11 investments. Most of them are doing extremely well. One of them we just raised at a very big multiple, like 8 times multiple of what we invested 2 years ago. We just raised that. So we're doing exceptionally well. I mean, our first fund, our cash on cash returns at the moment, without tax and that, is sitting at, if you put in $1 million, you're sitting at about 2.73 million. So we're close to 3 times return on capital in our first fund. That's the older fund. And yeah, that's how I got into VC. And I just love to be hands-on. I love working with the guys. I love helping the guys. Our passion is to impart that knowledge that I was so privileged to get. I had some of the best mentors in the world from all over the world teaching me how to be a great entrepreneur, to be a great businessman, to be a great leader. And yeah, that was my background.
I know for your 28 years with Accenture, obviously you have this experience of building businesses, helping businesses with their strategy and growth, things like that. But transitioning to a venture role obviously has its own differences in terms of managing others' money and things like that. So during that pivot, what was the biggest challenge for you, and what was the hardest learning curve from consultant to venture capitalist?
I think let me just clarify the consultant. I mean, most consultants, and I don't want to generalize here, but a lot of the guys from McKinsey and Bain and that, they're advisors. They advise. They don't execute. I think the difference with Accenture, we advise, but we execute. So I had all the execution experience. I had built these companies and done it. So I'd actually been there, done it. Hands-on. That's why I felt I was ready. But your question is so interesting, because what I thought I knew then and what I know now is I knew nothing then. And I realize now how little I actually knew. And it's been reading, today there's no reason not to learn with YouTube and podcasts and all the books and all. There's just too much. You have to sieve out what you want to learn. So I was going through books on venture capital, books on entrepreneurship, not technology because I knew that stuff, but actually books on how to run a venture capital company. What's the difference between an LP and a GP and the local partner agreement? How these things, what does it carry? What is the management fee? How does that all work? How do you actually make money in the fund?
The details, little nuances.
Yeah, the little nuances, and they weren't rocket science. There's no rocket science. I must be perfectly honest with you. It's actually very straightforward. And one of the best books I read was, I think it was a book called How to Be Better Than Your Lawyer by Brad Feld. Venture Deals by Brad Feld. And I read that book and I realized, wow, I have to read another 100 of these and I'll be there. And I read 100 of these, and I was initially headhunted to, before I started my own company, on another venture capital company. And I must be honest with you, I just sat there and I listened. And they said things and I said, shit, I don't know what you're talking about. And I wrote them down. And then they said something else and wrote it down. And they talked about a rights offer, and I wrote it down, went home and said, okay, I know what all these things are. Why not? Because you got Google, why not just learn it? And I'll just keep on learning, and the curiosity I hate not knowing. I'm so curious. I'm like a little boy. I want to learn and learn and learn. I want to be a better version of myself every single day. I see myself today as work in process, as in permanent beta. I'm still today reading 2 books a week. And I'll be honest with you, I mean, I don't want to sound arrogant or anything like it, but I know the stuff now. I really get it. I know it. But when I read new books, I'll say, oh, wow, there's a pearl there. And there's a pearl there. And I write them down. I've got those posts that I do on LinkedIn. I just write them down and I post it.
As someone being in this for 10 years, in the venture portion of it, like, you obviously come out with a lot of conviction now in your career. I don't know how long it took you to get there, if it's been 10 years or if you had it 5 years ago.
No, but I'll tell you, as I said, I made an investment the other day, which in hindsight was the wrong investment. So even today, I'm still learning. And I took that investment and I broke it down, I wrote the pros and cons, and I wrote, why did I get to that decision? What could have I done differently? And I came up with a big story, a really good story of what I should have done differently, which would have avoided me making that investment. But you make mistakes as a venture capitalist, and I don't like mistakes.
Well, on that note, and maybe you just answered this question right there, but what has been your biggest misstep as a venture capitalist, and how did you overcome that?
Well, the biggest misstep always as a venture capitalist, as a VC, it's not actually which deals you do and they fail. It's actually which deals you don't do and they actually succeed. That's the hardest thing as a VC. You don't do a deal for whatever reason at the time, and then you see they make $1 billion, become a unicorn, and you kick yourself. I'd rather lose $1 million than actually not make an investment and they're worth $1 billion. That is the hardest thing as a VC. I've made that one mistake once. Where I saw this company, I didn't see it properly. They just didn't give it to me. The founders just felt like I didn't trust them. I felt like the integrity wasn't there. They seemed to be contradicting each other. But they built a very, very big business, and I declined the investment. So I think that's my biggest mistake. What I learned from that is you have to be more discerning. You have to be more of a thorough DD. Don't rush into a decision. But I also learned that the best VCs in the world say no to the best companies. You look at some companies that took Amazon, that took 150 VCs to invest in them. There's all these stories around there. So VC's hard. Picking winners is really hard. But I think if my one skill I think I've really developed the most is picking winners. Picking winners and then picking the right C-suite in my investing companies that I help them with, the VP of sales and the VP of marketing and the VP of product and the VP of engineering, the VP of HR, of human capital, whatever. But I think I've learned how to do that really, really well. And that came from my Accenture days. I had a big sales team, and that hiring was one of the hardest things you have to do. And I think I tell all my CEOs that you've got to spend 25, 30, 40% in hiring. Once you get through that initial phase of being a startup and you start in the growth phase, where you're now not the salesperson as a CEO, right. You're hiring a salesperson to actually do the sales. You're helping. That's when you migrate from entrepreneur to a leader, because you've got to turn into a leader where you empower and you let people do things, not you doing, running. You have to stop that when you get to the stage that you start. And it's incredible, some of our businesses, to see the leaders or the entrepreneurs convert themselves to leaders. But I'm still concerned about some of my businesses where I don't think that they can build it to 50 million rand. I don't think they could make it to $1 billion. I think they'll reach their ceiling.
Because the founders just having that trouble with the transition to
they're good at the chaos and the entrepreneurship and being a founder. They're very good at that. But once it becomes orderly, they're not good at that anymore. They want chaos. And then what happens if you leave them in? They start throwing these hand grenades in the business to create the chaos.
There is, I don't know the statistic off the top of my head, but there is some number of showing the person who typically finds a business, not necessarily the one who takes it public. And it's very often the case.
I read last night 50-50. Yeah. Or no, in fact, sorry, I'm lying. It was 25%. So this was from Greylock Capital. I was watching a great show last night. It's called We Crashed, which is the story about WeWork and Adam Newman and his wife, Rivka.
Apple TV, right? Yeah.
Apple TV. I just got the last episode's not out yet. I just can't wait. But they said there on there, Greylock Capital invested in both Uber and WeWork, and both the founders were fired. So they said in there, I think it was in this, either in the story about it or in the podcast, where 25% of founders that go to an IPO, only 25% are the founders, 75% are not the founders, which I found very, very interesting.
It makes sense. And speaking of picking winners, and we'll transition from you personally to Kalon, and then we'll talk more about the ecosystem here. But so your firm, what are the winners that you look at? So what companies you invest in typically, what stage, check sizes that you typically write, and then what are the qualities that you look for in founders?
So I think the stage number one is growth capital. So we look at a portfolio theory. So we'll invest most of our capital in growth, some of it into beyond growth, into more pre-IPO, and then some into early stage, about 10%, 80% and 10%. And most of our investments is where the company's found product market fit. So if I look at the 3 stages of a company, it's finding product market fit, finding a repeatable and scalable sales motion, and then just execute and scale. So we come in at that second part or the third part where we're looking for a repeatable and scalable sales motion and a profitable sales motion, and then it's just pouring foot on the gas and putting fuel on the fire and just flying. So it's either the second or the third stage. We have done one or two at the first stage and actually done incredibly well. What do I look for? People that have done it before. So if I'm investing in an early stage company, I would never invest in an early stage company. Now I'm talking about it is a product. It might have 1 or 2 customers, but it's very, very early. That's where the entrepreneurs have built a company before. They've been there, they've done it. They've got the scars in their back, and I'm putting all my money into founders. And everyone will tell you that. And we keep on putting money into founders. So, but a little bit later, I want to see the execution. So they're great founders. They've been there, done it, but they can execute. They understand the unit economics. They understand the accounting. They don't say this is my accountant's problem. They really, the most important, and Warren Buffett said it, accounting is the language of business. Now, you need to understand your unit economics. You need to understand what's your cost of acquisition, what's your lifetime value, what's your burn ratio. I want to understand that they know what they're talking about, because if they don't know that, I have a problem from day one, because they're going to burn through our capital. I want to see that they're frugal. I want to see, I call it the 5 C's. So for number one, if I look for an entrepreneur, so what I look for in an entrepreneur, one is coachability. They've got to be coachable, because a lot of entrepreneurs, particularly second or third or fourth time entrepreneurs, know it all. Now I'll tell you something, I've been doing this for 35 years, and believe me, I know nothing. And I know I've got my mentors that I learned from. And if they think they know everything, I'm out, because they can't be coachable. I will tell them, they'll tell me to whatever they tell me, but I know better. I've been there. I've done this before. Don't think I'm the first time, and that just turns me off completely. That's number one, coachability. Number two is communication. They've got to be able to communicate, because when, as an entrepreneur, you communicate to your people. You communicate to investors. You communicate to the press. You communicate to everyone, your customers. You have to be able to communicate. And a lot of entrepreneurs who come from maybe more an engineering background, and they can't actually communicate in a simple business sense. So I asked them, well, what's your value proposition? What do you do? And I'll tell you, I sit there and I think, I must be stupid, because I haven't got a clue what you've just said. I'm a tech guy.
Yeah.
You're talking about the metaverse, or you're talking about NFT, and I just don't understand what you're talking about.
Right.
They can't communicate. So I like when I heard, I'm going to go to this part now, that I like the engineer and the sales guy. The business person and the engineer. Someone's got to build it, someone's got to sell it. You need the hacker and you need the hustler. I love that combination of them. But I don't invest in 3 engineers. Because I'll tell you something, until they get that salesperson, that hustler, they can come in there. The engineers. What do engineers do? They build and build and build and build tech. When's it ready? Never. No, there's one more feature. No, there's one more feature. So sorry, that's the third C. Let me just get to. So the second C was coachability, communication. They got to be able to communicate. Then charisma. I want them to have charisma. They got to be able to walk in that room and they can charm people. That's sales technique. That they can know how to listen. Then I want that commitment. I want to see that these guys are committed. They're not born with silver spoons in their mouth. They're going to work 7 days a week. They're going to be switched on 24/7, 365. What do I mean by that? It doesn't mean they have to work 24/7, 365. It means they're thinking about that business 24/7. They're always thinking about that business. They never switch off. I never switch off. I might go to bed at night, I'm thinking about Kalon. Come the weekend, I'm thinking, I might not be working, but I'm thinking about it. What can I do better? What did I do well this week? What did I learn this week? What didn't I learn this week? What was the good? What was the bad? What was the ugly? I'm always on. So I love that commitment, and then that curiosity we just spoke about. They must be curious. They mustn't be obsessed by the competition, but they must know the competition. But they must be obsessed by the future. When I make an investment, look at 5 years down the line. Where's e-commerce going to be in Africa in 5 years? Not where it is today. It's going to be totally different. Bandwidth's going to be probably free. Everyone's going to have a cell phone. You have to be curious the whole time, be a learner. That learning, work in process, see yourself as work in process the whole time. And so that's the 5 C's that I look for in an entrepreneur.
Yeah. All 5 of those, I think what you find is you see those consistently in the most successful companies. So I think that's a really good framework to use. Let's focus on pivot here from Kalon more to the South African ecosystem, right? So you've been here investing in this ecosystem for 10 years, and you mentioned when you first started that it was very nascent, right? Now it's, if you look at Africa, it's part of the big 4, Nigeria, Egypt, Kenya, right? In the past year alone, we've seen a lot of growth. 2020, I guess, was a low year for everybody, but we're seeing explosion in the continent as a whole, right? So let's talk through the ecosystem. What do you think are some of the challenges that still remain here in South Africa when it comes to funding and starting growing businesses?
Well, I think, since I got involved when I started Kalon about 7 years ago, so I was in VC for 10 years, but I started Kalon 7 years ago. There's definitely a lot more capital in the ecosystem than there was. There's not enough, not even close. So this venture capital, let me talk about venture capital for a second. You asked the question, what check size? $1 million to $2 million. That's sort of the check size we'll write. And that's pretty much the check size, maybe slightly more than most VCs in South Africa, because that's the capital they've got. They can't make more than that. So if you've got a guy looking for a Series A, Series B, 5, 10, 20 US, it's not coming from South African capital. It's going from overseas capital. So what's good is that there is some early stage growth capital, like pre-Series A, Series A. I think there is that sort of capital. Valuations are still not completely off the wall, like they are. Okay, they're taking a bit of a downward slope now, but the valuations are not completely off the wall. So we can still invest in those companies. Where the biggest problem with this ecosystem is at the angel stage. So if you look at the US, you look at where those same investors were doing Series A for $5 million or doing an angel for $5 million. That capital doesn't exist in this country. So there's angels, very few, not enough capital, maybe put in 250K, 500K, but if someone wants $2 million, they got to write for a VC and get it in pre-Series A, Series A.
Is that because that they're simply the amount of wealth here is not enough, or simply because there's not enough education around the asset class?
No, there's no shortage of wealth in South Africa. There's a lot of wealth in South Africa. Look at this. There's lots of wealth. People don't understand the asset class. So they don't understand you should be putting in 10% into more risky asset classes like crypto and VC. Some are getting it now, I'll be honest with you. So you see quite a few corporate funds that are starting and they're getting it. But I know it's a hard sell. So we've raised from retail investors $250 million, but that was hard. We really worked for raising that capital because they just say, no, I'll put in my unit trust, I'll put it here, I'll put it there, I'll put it in the Johannesburg Stock Exchange. But it's changing. Yeah, we want to go and raise a $50-100 million fund, and we think, not necessarily from South Africa, that's going to be from global investors. But we want them to invest in an African fund, so being based here, but for Africa. But we think, for one, the appetite for Africa, so let's talk about South Africa, there's a lot more capital flowing from outside into South Africa and Africa, Egypt, Kenya, South Africa, and then North Africa. There's a lot more capital flowing. It's unbelievable. $5 billion, I think, or $6 billion last year was invested. It's still nothing compared to Silicon Valley, but $1 billion is a lot more than nothing. That was 3 years ago. It was like $1 billion. So the ecosystem here lacks angel investors just because people are not. They don't see the upside in tech. They don't understand it, but they're definitely starting to see more and more money flowing, but there's not enough of it. Because we don't invest in angels, so most of the VCs here don't go early. So you need those angels that build that business for the VC. We don't have a Y Combinator here and Techstars and these sort of accelerators. If we had them, it would be fantastic. There are some, but they're not the caliber and level of mentors of these guys. So I'll say the biggest challenge for us here is probably mentorship. Good mentors to actually help you bounce ideas off and help you say, don't go left, go right, because the pothole there and right is a way to success. And secondly is early stage capital and late stage capital, but that's getting better.
And for example, I know, and there's been some changes over recent years with the 12J law, but there were incentives there for people to actually get involved in venture capital for tax reasons and like that. Are there any other government initiatives to help, incentivize people to get into this asset class, or any educational initiatives, anything?
I must be honest with you, I think the fact that 12J was stopped was the government threw the baby out with the bathwater. And it was stopped because, in all honesty, it was being abused by certain funds. So the few rotten eggs impacted the whole thing. Instead of solving the rotten eggs and letting this thing continue, because it was a fantastic initiative, those rotten eggs actually destroyed the whole barrel and they stopped the whole thing. So I'm not aware of any initiatives. There's initiatives. There's talk, there's always talk, but the 12J was action. It was a phenomenal thing and really helped this ecosystem. And personally, I'm happy it stopped because of being abused, and I think we were all seen as this abusing a system, which we weren't. We were absolutely what it was intended for. Right. Venture capital, tech, it was exactly what we did. And that's made us think now much bigger. It's made me think much bigger. I don't want this 12J raising $250 million rand. I want to raise 1.5 billion rand from an overseas fund. So it's made us think much bigger. It's been a means to an end for me. The end was creating a brand and creating a great VC and understanding VC. The means was 12J, and it was fantastic. It really served its purpose. But as I said, I'm not unhappy that it was stopped because it was too constrained. We couldn't invest in this, and we couldn't invest in this, and we couldn't invest in this, and so we can now go and raise a global fund, and we got freedom to go and put money where we want to put money. If I want to put money in Nigeria or Egypt or Kenya, that's what I want to do. I couldn't do that with 12J.
Okay, so you get to expand and be more flexible with your fund. So the pros and cons. It was an initiative. It had a good intention. It got abused. It's frequently what happens with laws everywhere. So.
Yeah.
But in terms of the angel investment piece and incentive, I think what typically happens in markets is when you have previous founders who have exits, they usually come back and help develop their ecosystem, become angel investors in their ecosystem. So some of it also depends, I think, on having exits here in South Africa, having those success stories. South Africa is yet to have a unicorn, to my knowledge, right? So switching gears then to that company side of growing these companies, what are some obstacles to growing and expanding and starting from here outside of the funding piece,
Well, I think number one is mentorship. They haven't got people they can surround themselves with that. There's lots of venture capitalists here, but they're financial advisors. They're not venture capitalists. So if I look at Kalon, why are we different? We're different because I am a tech entrepreneur. I've built many, many tech companies. I can see and I can talk about the 10 software as a service metrics. I go to the board meeting and they look at me like I'm crazy. So I go and I join a board and they've never, ever measured these type of things. The most of venture capital in South Africa is not ex-entrepreneurs. And that's when we'll get real success in this country, is when we can be like Silicon Valley. You can be like the guys from Secure Capital who built, or Elon Musk, who built eBay and who built all these companies, and they
Right.
become the investors. Those guys get it because they've seen it before. They've got the pattern recognition. They've got the scar tissue that helps them recognize. I can see the road ahead. We don't have that in South Africa. We've got a lot of actuaries, lawyers, accountants, honestly, become venture capitalists. And I'll speak to them and I'll say, how does anyone actually, no disrespect, but take your money? Where can you help them? But it's because those entrepreneurs don't want help. They want to do it. They just want money. Leave me alone. Give me money, and I'm going to do it myself. That's what they want. But I couldn't do that. I mean, it's I get hands on. I help these guys every day. I'm not saying I got all the answers, but I know a few answers.
I want to respect your time, so I'm just looking at the clock. There's just a couple more. What would you say is the biggest misconception about the South African startup ecosystem?
No, I think the misconception is that we don't have talent in this country and ideas, and I think we do. But at the same time, I'm going to contradict myself. We have entrepreneurial talent, but we don't have enough engineers. We don't have enough guys that have done, can build a crypto exchange. We don't have enough guys in metaverse and building. We don't have those type of skills. And those skills, you've got to understand, South Africa, we're paying $50,000. They'll earn $200,000. They go elsewhere. So these skills are leaving this country left, right, and center. So that's a problem. So we have to rely on India, and we have to rely on other, places where there's lots of skills. And that's probably for me, is probably the biggest concern I've got, is the lack of technical skills. And I don't think it's sales skills or commercial skills. We've got that. You can find that. It's actually technical skills, because they get stolen left, right, and center from this country. And we've got fantastic universities here. We've got fantastic places to learn. But you can't, a 25-year-old that can earn $200,000 and a 25 can earn $50,000. You've got to understand, they're going to go for $200,000. So it's hard. And when they don't go and they want that sort of money in South Africa, you get a seed investment or even a $1 million. I can't pay the guys $500,000 when they've raised $1 million. So that's some of the challenges we do have in South Africa. Look, that's the same challenge they have in America. In all honesty, these guys are demanding. It's better now because of people don't necessarily work where they live. It's not just you have to work in Silicon Valley to be part of Silicon Valley. So I think COVID has helped. It's very distributed, and I think it's helped a hell of a lot. We distributed, but we still struggle in South Africa to find the skills. So I think that's probably the biggest impediment. And then there's regulatory issues. Be honest with you, the government is not conducive to, when you need to get, like, take your RP offshore. RP is a big issue. That you want to get an exit, you don't want to get a South African exit, you want to get a global exit. So RP really is a challenge. And you need to get South African Reserve Bank approval, Excon approval for these type of things. And it's hard. And we're still struggling with that. The government's trying to do the right things, so regulatory issues are a problem. Government are starting to do some things, but they need to speed up much, much faster.
Final question for you. Take out your crystal ball. Look at South Africa 5 years from now. What do you see the ecosystem in 5 years? What are you most excited about?
Well, I think if I look at, one of our top economists just said, you want to create jobs for 5 million people, you've got to create 1 million entrepreneurial businesses. And I'll see, if you look at the corporates in this country, they need to look after their shareholders, and they're getting rid of people left, right, and center. Yes, they're hiring up with certain skills, but others have got these historical skills, the other skills, even in tech, they're discarded. They're not needed anymore. We need new skills. We need the 21st, 22nd, 23rd century type of skills. So where I see a problem in corporates, I see that opportunity in entrepreneurship. A lot of older people are let go. Got a lot of people that are going. So these people have got great skills, great networks. They've got great domain expertise. So the average age of an entrepreneur here, I want them to be 40, not 25. That they can bring 15, 20 years experience with them. So that's where I see a problem in corporates, creates an opportunity in entrepreneurship. So I'm very bullish it's going to get bigger and bigger and bigger with some of the challenges we have in our corporates in this country. We've got something called Black Economic Empowerment, which is very good, that you have to hire a certain number of people of color. So a lot of people of my color don't get jobs anymore. So what do? They start their own businesses. So I think that's fantastic, to bring all that expertise and that knowledge and grow those, not the 10 people companies, 100,000, 10,000 people companies. That's what we want to see. I see that coming. I see some of our biggest corporates today. They were entrepreneurs. They started by themselves. They were one person. They now have 10,000. I see that coming in this country. And I've got one or two companies that I see could be the next unicorns in this country. So I'm very, very excited. And so I'm seeing more and more, and it's nice for us as VCs, we see better and better deal flow. So we can be a lot more selective of who we invest in, which is a fantastic position to be. Before, I must be honest with you, there wasn't enough deal flow, so you sort of got a little bit desperate, like, hell, the longer I'm holding on to this capital, I'm getting cash drag, and I'm not returning the money to my investors. We don't have that problem anymore. We have the reverse problem. And so 5 years down the line, I see it only getting better. More and more entrepreneurs, more and more people that can get on opportunities of creating wealth and employing people.
I agree. I 100% align that. I mean, that's why I'm here. So,
no, that's great.
Thank you so much.
No, thank you. Sorry I rushed it.
I know you do. I know.